I never use my headphones though, so let me check my speakers here.
Don't you guys have a podcast?
I think if I could only invest in vertical software, I probably would. Let me give like a terrible answer here.
Oh,
I,
sweet.
I
Love
Looking
those.
forward to it.
and if you don't agree with me, you're
We'll just edit it out.
ambition can like wane or expand. Like that to me,
Mhm.
that's one thing that's very hard to assess. I'm sure that this will be the lowest listenership you've ever had on any episode, so you're welcome for that.
Hey everybody, welcome to the Cheat Code. Welcome to another episode of the Cheat Code and Friends podcast, our bi-weekly roundtable of topics ranging from venture capital, startups, the world, where
Complete
we
nonsense.
complete nonsense, where we have our group of regulars, Justin Gray and Sean Kester. Hello, gentlemen.
How we doing?
Josh, it's awesome to see you.
It's so good. And our friend today is the one and only Gregg Scoresby, founder, CEO of Campus Logic, which he exited a few years ago. And now our
Yeah.
partner, comrade in the startup life with the founder of Phoenix Ventures. Gregg, thanks for joining us.
Well, thanks so much for having me. I don't know when this is going to air, but hopefully there won't be any tariff talk. I'm all tariff talked out now
No
today.
tariffs. We have a no tariff policy today.
Putting 25% tariffs on all my portcos.
That's how we're going to recover capital. I
Yeah.
love it.
Nice.
What a plan. Well, today, our first topic, I saw a LinkedIn post from you just this morning, Gregg. 60 is the new 40, and it leads right into topic number one, which is founder traits. So I want you to go ahead, Justin. I see you.
Well, why is it always like the people that you can tell someone's turning 60? Because
I got a few years, but yes.
6 is the new 18, baby. By the way, it's my birthday today.
Well,
right.
I think it was more related to the work ethic of founders being 40 hours per week for 60 hours per week. I barely glanced at it as we were getting ready to podcast here. But maybe Gregg, kick us off a little bit. 60 is a new 40. How does that relate to founder traits, and what are you seeing in the world of founders in startup land today?
Well, first of all, thanks for having me. I think there's been a lot written, of course, about founder attributes, founder archetypes. We can riff on a couple books about that as well, I'm sure, along the way. But one of the things I think that founders have to be great at is you have to be capable of being obsessed with the problem for a decade. And that actually sounds, maybe easier than it is. I think some people lose interest in the problem, or like, you shouldn't have to count your hours of how much you're working. You just can't let it go. And when I say obsessed, I mean, I'm not sure. I think the most successful founders are also the most mentally healthy. I'm not trying to be funny. I just think there literally is an obsessive attribute where someone wants to win, and then they have to be great at hiring people who have that shared intensity. So I don't think intensity has to mean toxicity, but I think there has to be an aspect, a culture of winning. And look, I don't think Tom Brady, he was the greatest quarterback of all time, but part of that is he played till he was 45 because he was obsessed. He just did it for a long time, worked harder than everybody else. And so
Right.
I think there's a lot of sports examples of that, but I do think being obsessed with a problem for a long period of time is part of it. And then on a daily basis and a weekly basis, it just translates to extraordinary effort. Extraordinary outcomes require extraordinary effort.
Yeah, I want the founder that's going to deflate the football. Come on. But I think,
Justin's one nugget of sports knowledge is Deflategate.
Exactly. I was able to use it this morning.
Yeah.
I actually looked that up on Grok before saying it. But so Gregg, I mean, you focus on the same cohort that we do, right? Like early stage, and there's a lot of talk around jockey investing and so on. I guess even as a precursor to Josh's question, how important is the founder and their traits to the decision ultimately that you're going to make to invest or not?
I mean, I would never invest in a company where I thought, wow, this is a really interesting idea, but this founder sucks, right? You would never,
Right.
like you would
But
never.
would you invest solely on the founder?
I personally wouldn't. My mantra is, if you have a great jockey and a three-legged horse, you won't win. And now, by the way, great founders also wouldn't choose to ride a three-legged horse. So I think it's
Right.
a little bit, some of those things go hand in hand. Great founders pick interesting problems and have a unique point of view on how to solve those problems. And so, but I think it's definitely has to be founder driven. But this is a small thing, and I don't want to over orient around like excessive effort here, but people just can't let the problem go. Like great founders just can't let the problem go for a long time. And I keep coming back to that because I think you can make a lot of mistakes, but the harder you work, the faster you can recover from those mistakes. And making mistakes, of course, is connected to learning. But you have to putting in effort is just a key part of that. But I think it's both. I think it's jockey and horse. It's easy to be reductionist and talk about that in an interesting anecdote. But I think there's probably a lot more nuance to it as well.
Yeah,
Well,
when
yeah.
you I was
Go
just saying,
ahead,
when you
Sean.
think about obsessed, like what are some of the telltale signs? Well, like especially early stage when you meet someone at first, right? And you're going through diligence, or you haven't maybe only had an hour of FaceTime with them. What are some of the things that you look for?
So curiosity and obsession are like probably go together a little bit here, right? If you're obsessed about something, that means you want to learn about it. So I think to the extent, people want to ask questions. Well, let me maybe carve this out in a couple of aspects. So I'm always interested when a founder tells me what podcasts they're listening to, what books they read, and they're obsessed with the craft of like becoming founder turned CEO. Everyone has to become a CEO, and we might maybe we'll pull on that thread too in the conversation. But I think there's an obsessive aspect with, hey, I want to build a company, and you have to learn to be a company builder. Like no one naturally knows how to build a company. That's a skill that has to be learned by everybody. And then I think there's an aspect of, hey, obsession and curiosity about my customers. And this is like first and foremost, I have to be really curious and obsessed with what's the job to be done for that, for that customer, what's their job to be done, and how can I make their life easier? And I always orient around B2B context, but I think this applies in consumer businesses and other businesses too. But, I think it's someone who asks a lot of questions. To answer your question, Sean, like that would be a manifestation of curiosity, someone who's taking in a lot of outside information, resources, and trying to learn, someone who's self-aware. Those are people who want to improve as well. But I think it's also just people who are so curious about a problem, they just can't let it go. So to me, that's how obsession shows up. It shows up in trying to be better, trying to be curious, asking a lot of questions, taking in divergent points of view, and trying to make the best decisions based on all those things.
Yeah, we have similar investing theses. Is that even a word? In Revenue and Phoenix Ventures, but there's a slight difference, right? We have this vertical focus, and I think part of what that's about is maybe an ingredient we haven't talked about, which is subject matter expertise tied to obsession in the product, right? And now I don't think we're perfect in that, but I'm trying to understand how you see subject matter expertise tie into that obsession with the problem. Is it a thing that has to be there, or is it just, listen, I just stumbled across this problem because I felt it and I need to go solve it?
Yeah. By the way, on the vertical point, by the way, I think if I could only invest in vertical software, I probably would. Like I totally agree with you there. I built a vertical software company. So
Right.
like that's understanding that it feels familiar. And yes, what a lot of people don't see is, usually you learn about a problem in the course of, like most successful founders, or many, I should say many that I'm around, they are the buyer persona. They used to work in
That's right.
the job or in the function, and so they learned about the problem because it was their problem. So when they go, you guys probably, maybe you've heard me say this before, but you guys watch Shark Tank. You know who Damon John is, of course.
Mm-hmm.
Like the clothing brand
Uber, baby.
FUBU, right? I mean, he talks about I couldn't find people that were building, like making clothes for like me and my friends. So he started sewing clothes on his family's sewing machine in the basement. And it was like for us by us is FUBU, right? And so I always want someone who's building like the FUBU of like financial aid, or the FUBU of healthcare
I love that.
payments, like the FUBU of something. Like because when customers see it, they will say things like, wow, this feels like this was built by someone from like my industry,
Mm-hmm.
and like it was built for me. And like when they say that, then you know. So I do think expertise matters a lot. I have, you guys I'm sure have this too, but there's always counterfactual examples. Like
Yeah, the
uh,
exception.
yeah, there's always exceptions. So I've got cases of exceptions, but I can rattle off a few people. I look at, Gabe Cooper, who's built a really successful company of Virtuous, CRM for the nonprofit industry. He started off in an agency type business, building websites and marketing projects for nonprofits in their fundraising efforts. And he realized, wow, this data is not ending up in like everyone hates their CRM here, and they're
Mhm.
like legacy incumbents. So he observed the problem, not because he was at a nonprofit, I don't think, but he was a service provider there, and he kept hearing that from multiple service providers. So he had some pattern recognition there, and then I look at Enoch Ko, another founder we backed, who recently closed a Series A at Soroban. Enoch was his then fiance, now wife, was a tax professional. He was interested in this problem. He actually started a tax preparation business and tried to automate it. And he realized, wow, there's an automation, 100% automated tool. If I could build this, the most automated kind of intelligent client experience is this category he's trying to create. And so he experienced the problem, and he's like, I can make a super efficient, great client experience and sell this to CPA firms, and they will make more money and be happier. Like they'll deliver better client experience. So he experienced the problem firsthand. So that's definitely something that resonates. Someone experiences the problem in their own world, and then they become like obsessed with fixing that problem, and they're willing to work on it for a decade. I do have counter like exceptions, but I think that's more true than not, because someone develops, and part of that is like related to obsession. Someone develops conviction. No, I know this is a problem because I experienced this problem. You don't have like, we don't need to debate whether this is a problem or not. I'm not trying to do discovery about whether this is a problem because I experienced this. I know it's a problem. So that conviction creates like a shorthand to building, that if someone else is doing discovery in an industry they don't understand, it just takes way longer, and people lose interest. Founders lose interest often.
Yeah, you mentioned before, nobody just inherently knows how to build a company, right? And it brings me to another dimension of the founder that I find interesting. Where do they come up, right? Are they a sales person? Are they a product person? Are they an engineer? Are they a marketing person, a finance person? This is open to the group, right? Like, what are we
Yeah.
seeing in terms of the path that they came up with? If nobody's a natural at building a business, does any function in your upbringing make you a better fit maybe for being a business builder?
What do you guys think?
I just know the paths I don't like.
Let's go.
I mean, I don't like go to market in general as a skill set, as a historical discipline for most founders. Not only because it tends to butt up against our particular business model, but because I think it's hard to really
We know better.
experience. Well, two things. I think it's hard to experience those problems from some of those roles, and of course there are exceptions. But I also think it's just historically been difficult for me to get root accuracy from those folks. It's explicitly with sales, it feels like there's just a lot of gloss being applied to everything versus truth, because that's just, and being a hype man, hype woman is very central to being a founder. But I think there's also a time to really shift gears and call attention to truth. And I've just had personal issues and problems in the past with getting that truth from founders who have come from the sales discipline. And I lump marketing in there, but it's almost a different set of challenges in terms of really engaging in the customer path. For some reason, a lot of marketers just don't gravitate towards spending a lot of time with customers. And I think you see that in that discipline wholesale. But personally, those are the ones that kind of get the hairs in the back of my neck up from a caution perspective.
What's interesting about that, Justin, is I think we didn't talk about this before, but I'm certain you agree. And if you don't agree with me,
we'll just edit it out.
We'll
Let's
just
talk
agree.
about it.
We'll just agree you're wrong. But what's interesting is I agree. I haven't thought about this exactly, like what function they come up on, but I believe so strongly. In fact, I wrote something earlier the week about selling. Like founders have to sell. And so it's kind
Mhm.
of an interesting dynamic when you think about it. Like coming out of a sales background, you're saying maybe isn't the right background. And I agree with that for maybe some specific attributes that make salespeople highly successful. Like they may not translate to building a company in total, but just because there's the very nature of company building, but you have to be able to sell. And I think sometimes early stage founders are convinced someone else is going to sell their product for them. And so I think that's an interesting like paradox. On one hand, maybe the sales archetype might be like less successful as a founder, but founders have to be great at sales. But what do you think about that?
I mean, keep in mind, I'm saying this as someone who literally came from the go-to-market disciplines and has run many companies, right? And so you're looking, in my mind, I'm speaking in general buckets because it's abnormal. Founders are abnormal. Although I do think folks that I've seen that come from sales disciplines don't have as much of a check and a balance in terms of should I really start this company? Is this problem large enough? It often comes from, well, I can sell anything. And therefore, and you do sometimes even see traction coming about as a result of that. But I 100% agree with you in terms of a founder has to sell. I think a founder is a weird generalist that oftentimes doesn't find their best use is in sales when they were in the workforce, but they have the desire or at least the ability to sell, and they know that that's a requirement from them for being for starting a company. So founders, in my opinion, are just a very unique breed. We've made it almost too easy to start companies, in my opinion, and therefore you just get a lot of bulk and a lot of access out there that don't go anywhere. And ultimately, I think revenue is the proof point of that and happy customers. But more than any one background, I think it's individuals that have the ability to be a generalist. And another problem with sales oftentimes is like no operational process. Like I think creating operational infrastructure and lattice work early in a company is so critical. And so again, I'm speaking in generalities because that's not where a lot of salespeople excel, but you've got to be looking for that generalist skill set, which oftentimes I think just leads them to be in other disciplines.
Yeah,
Super
screw
insightful.
scales, guys.
I feel like
I
I'm being
think
put on blast here, Justin.
yeah,
Jesus.
I feel like that's why I really love having co-founders versus a solo founder. I feel like a solo founder, you're very they have a very singular background, or maybe they're not very dynamic, or maybe they're, as you mentioned, they have more of a sales. But if you can find that proper counterbalance with a co-founder, especially if one is more go-to-market, one's more technical, because to Gregg's point, you got to sell. You can't have two guys who are code all day and they don't know how to sell and go out there and not know how to speak to customers. You can't have two people that only speak to customers all day or only sell and can't code, right? So, you've got to kind of have those counterbalances in place. And like, I personally had success at a company where I had a very go-to-market CEO with a very non-go-to-market co-founder, and they were very, very much opposites, painfully opposite, but like in a way that made it into a correct counterbalance.
Yeah,
Yeah, that
I
is
know.
interesting.
Yeah,
Go ahead, Greg.
I think you have to find. I mean, you have to just hiring in general. Like you have to hire for your deficits.
Right.
Anyone that says to me like I just want to find clones of myself and that's the key because I know I work 80 hours a week and I'm looking for other folks that do that and if I could just find someone that operated like me
Right.
and without a doubt that's like the biggest red flag that you can see in an early stage company. So I agree.
That's an interesting idea too, because Sean used the word co-founder, whether it's a solo founder who quickly hires for their deficits or whether there's a
Hmm.
co-founder relationship. I think like the point is the same. Like you need to do that. One thing that like that leads to another attribute. I I I love hearing divergent points of view. I love constructive debate. Like where I'm sitting on the same side of the table with people, but we're hammering on a problem. And sometimes it does feel like we might go on opposite ends of the opposite side of the table. But I love companies that are so obsessed with the problem, there's a little bit of debate. Like I'll say like a lot of debate, but only a little dissent. Like things need to like debate needs to be constructive, and in order for it to be constructive, it has to resolve like pretty quickly. You can't think,
Right.
hey, gosh, I don't want to have my one-on-one with Justin anymore because like he's driving me nuts. So I think it's an interesting challenge because you've got to hire for your deficit, which means hire people that probably aren't like you in many ways, who don't share maybe similar interests, but it has to be a constructive and productive relationship or the company will explode. I would say like over a third of the times I've invested early in a co-founding relationship, the co-founder relationship blows up. Like it's like a full third of the time. And I'm kind of unfazed by it. And I tell a founder, this is like way more normal than you think, but like it was also like somewhat predictable. Like, you could have seen this coming because you've had these like issues that haven't resolved. But I do think hiring for your deficit is critical. And that also means being able to like take input from people that are not like you and don't see the world like you is pretty an important attribute for a founder.
So I want to double click on that before I do. I'll make a statement though. Like my most frustrating and also most productive meetings at LeadMD were with my two number twos every single week. But we weren't leaving that meeting until whatever it was worked out. And like even if you disagree, like you're going to disagree and move forward. I think that's the the alignment that you have to have there. But I'm curious to get your opinion on the co-founder breakup because I have such a knee-jerk reaction to that in saying like, all right, well then one of them wasn't committed to doing whatever it took to be in that business. Like, but I think that also assumes that like there was a really strong alignment at the beginning. So I'm curious as to what your thoughts are when someone walks away from the business because man, that's a disappointing thing to have happen.
Yeah, from the investor side of the table, like I underwrote this like relationship working, like these two people working together. And from the co-founder, like they underwrote that too. I usually think there's conflict, and you kind of alluded to this. I think there's conflict in a couple of areas. One, sometimes it's like I'm younger and have more energy, and co-founder's older, or like has like it just timeline and time horizons are different. I'm down for like the 10 to 15 year journey, and my co-founder's like thinking this is like a 2 or 3 year effort. And like that just there's inherent conflict in that.
Yeah.
Work style, I actually think your work style has to be, even if you have completely different points of view, like politically, like functionally, how to lead. I do think how you work, like that includes effort too, has to be aligned. For example, I think everybody should like have dinner with their people, but in startups, you're probably back on after dinner. Like you just are. It's like that's what it is. And if someone's not up for that ride, like, hey, if you get upset when I send you an email at 10, by the way, I'm not expecting you to reply, but if that like bothers you for some reason, like this might not work. Like I just, most of the time, I think when there's a co-founder relationship, they have to always be on because there is a lot to like debate and resolve. But I usually think it's conflicts in like duration or style, or like, it's less about strategy because you can always resolve those things, but only if you have an orientation around like a similar work style. But what do you guys think about that? Or have you seen?
You made me smile there because my old CEO would take email breaks in the middle of dinner, and so we'd be in the middle of a conversation, whether it was personal or professional. And he'd be like, "Hang on, email break," and it was just 10 minutes of silence. And he would do that to me quite often. You picked on something earlier. You said you wanted to pull on a thread, and I wanted you to keep pulling on it. You talked about going from a founder to a CEO, and I think that's a really important conversation to have because it's a very big transition. It's something that I witnessed firsthand. My old CEO Kyle from SalesLoft would get up in front of the company every week at all hands, and almost every week he would repeat the same thing to everyone, and he did it for himself, but he used the term, you've got to grow faster than your experiences if you want to stay here at this business. And he goes all the way from the top down. Like, I've never been CEO at this level. You've never been this at that level. If you don't grow faster than your experiences, then someone's going to come in here and level up. Like, we're going to have to level up on top of you. And the board will do the same for me. And he would preach that to everyone. And I think that was built culturally, but I think to your point, like there's a moment where you have to learn becoming a founder, being scrappy to like becoming that CEO. So I'd love to kind of hear that thread that you were going to pull on.
So I think some of that, what does a CEO do, right? A founder starts a company, pursues an idea, maybe ships a first product. What does a CEO need to do? And of course, like these ideally are the same person, in my opinion. Like you founders need to become CEOs is the point, but they allocate resources. So like, what should we be spending time and money on? Like they keep a team focused. So usually founders that don't have clarity around purpose, mission, and values really struggle to lead as CEOs. That would be one example. If you can't create clarity for yourself, you certainly can't create clarity for all the people you're going to hire. But and purpose, mission, and values to some extent is like the best recruiting tool you could have. Like you're advocating for, hey, here's what we're about, here's our why, here's what we're trying to accomplish in the next 3 to 5 years, here's how we're going to behave along the way. Like that is the thing. So that's an example where someone's got to get good at leading, and that's part of that's resource allocation, part of that's focus, part of that's culture building, part of that is like building accountability for yourself and others. And to your point, Sean, like all of us have to recognize I'm not the CEO this company needs like a year from now, but I will be. I definitely will be. Like I'm gonna read, I'm gonna get mentors, I'm gonna go on the journey here. Right. And so I think not everyone wants to do that, but that's kind of what I was alluding to like founder versus CEO. It's one thing to start a company and ship an MVP, which is hard to do. I'm not saying that's not hard to do, but it doesn't get easier. Like then you have to learn to lead people, which is hard. And you have to learn to like shape a company culture. You have to learn to deal with investors, and you got all these different constituencies. I got to show up in the boardroom. I got to communicate to investors. I got to like hire executives who are maybe older than me, smarter than me, and better than me in their functional areas. In fact, they better be all those things, right? To hire for my deficits. So those are aspects that I think founders need to learn. And there's plenty of content out there to do it, but people have to do that.
So that's an excellent bookend to my earlier statement around like salespeople and marketers and so on. Like all of what you just described is leadership to me. And the folks who are great leaders in those disciplines, I find are the exceptions to my rule. The folks that are individual contributors and only like, I only eat what I kill and that's all I'm focused on, I find just transition into those roles generally poorly. Yeah. And so, but if you have that leadership aspect and that self-awareness, which is a lot of the root of how I take a lot of those traits that you just detailed, that is the secret sauce, in my opinion.
Yeah, self-awareness seems to be what we're circling around here, right? And if we take it all the way back to the beginning of the conversation and how are you, if we're underwriting founders, right, and we're looking at the jockey, how do you identify that trait? Because that's one of those things that could be a little bit hard, regardless of what discipline they come up through. I like to pride myself on being fairly self-aware when it comes to deficiencies and things like that. It's, the reason I'm partnered with the people I'm partnered with. So how do you identify that in a founder? What are the things that you can look for? Because Greg, I think what you were saying around the willingness and want to say, okay, maybe I'm deficient here. Can I hire for that? Or is this something I need to inherently be able to do as a CEO when I go to that next stage? How do you think through people that are going to take that nudge to say, hey, if you're going to be CEO, you need to move and learn these things and take those on without being a slight on them that like, oh, you're not good enough?
Let me give like a terrible answer here.
Oh, sweet.
I'm looking forward to it.
I actually don't think I'm very good at this. If you look at late stage growth equity investors, they'll use assessments like later stage to figure out how good the CEO is and like, is this someone we can work with? We're going to be investors in this company for 4 to 7 years. And like, we're trying to get the company to go from like 30 million to 60 million in revenue or something like that. And is the CEO going to be able to do that? That's a later stage. On the earlier stage, when you think about it, assessing the trajectory of someone, like when they're $500,000 to $1 million in ARR, and like what are they going to be able to run a 30, 40, 50, 60, $100 million ARR company? Like assessing the trajectory of that, I find really, really hard to do. And so and by the way, most early stage founders, and I'd love to actually have a tool for this, most early stage investors don't actually do some do, I've talked to some, but don't do a whole lot of assessment, like formal assessment of the founder, like personality test coupled with like other tools. That tends to be more later stage. So it's a little bit more, do I like this person? Do I like working with this person? Maybe I've got a little bit of a scorecard that I'm talking about with my investment committee on this person, but I think assessing the trajectory of what someone's going to be able to do is way harder it doesn't mean we can't get better at it. Like I want to be a lot better at this. I just think it's very hard to do. You got limited data points, right? In a lot of these founders, maybe if they're a second time founder, maybe you can go back and underwrite. Oh, well, they did this in their last business, so that's probably going to happen again. But if they're a first time founder, even if it's a high growth business, but still early, it's very hard to, and I can give you some examples of people that have scaled, but like, let me give you one example. I'll go back to Gabe Cooper at Virtuous. I've been on the board for 6 years. He is such a better CEO now than he was 6 years ago. He's great in the boardroom. He's great with investors. He's attracted like the best investors you can get. Just closed $100 million round with Susquehanna Growth Equity Partners last year. His energy's he's got more energy than ever. He's got more, like, he's more capable at recruiting than he's ever been. He's more decisive than he's ever been. He's more focused than he's ever been. I had no way of assessing that was going to happen, like, because he's the one who's developed himself to do that. So that's what I mean. Like, I have examples of where people have done this, and I also have examples where people have kind of like quit and like, hey, you know what, this isn't for me, and I did not see it coming. So I don't know. I'd love to hear what you guys think. How do you assess the trajectory of an early stage founder, like, and their ability to become a CEO? It feels easier at the later stage because there's more history, but what do you guys think?
Yeah, I don't think there's any magic bullet. I do think, just spending as much time as possible is the only ingredient that might be a weak proxy for that. But I don't think anyone can predict the future. I think that if there's big red flags, even in the amount of time that you're spending, probably not a good bet to make.
Justin, how does more time manifest though? Like, what is it that you feel when you're with that founder? Like, I agree with you. You got to have more reps, but what is it for you when you're with that founder and you're like, this is someone I have to invest behind?
I mean, for me, it just takes it out of the rehearsed narrative. The more just even unrelated to the business conversations that you can have with someone and just start to understand. You mentioned a couple traits earlier on in terms of like curiosity and like the ability to be self-aware and so on. Like, I do think that manifests in a lot of ways that are not quite intangible, but very hard to put a finger on. I also think like the more you can look into not the history with the business, but just their history as a human, there's some good indicators there. Like, have you overcome a good deal of hardship, or did you have to work for things? I have a personal like desire to understand how people are going to be stewards of capital, just in terms of how they view money and how they relate that within their own life and so on. It probably just makes me feel better, but so I don't know how much it's predictive, but I do feel like belief in someone as a person oftentimes translates into their ability to make that hard pivot or that learning journey.
Yeah,
no, but
I was just saying, not a hard data point. I mean, we're touching on a lot of soft stuff, and that's kind of is what it is, right? But one of the things, we do an investment, and we do a call with our LPs, and the founders come on, they do their little pitch, so the LPs can hear from them. They do a little bit of Q&A, and we've done that across all 7 investments we've made. And Justin, Sean, and I, as that's happening, we're getting texts from the LPs telling us, this and that. And we did one recently, and my brother's one of our investors, right? And he says, "Oh man, this is really exciting." I said, "Yeah, it is really exciting." I go, "I just feel better that it feels like we have adults in the room," right? This is the comment I made. And he goes, "That's exactly what I was thinking." And I know it's a sign of a soft thing, but just that feeling that this is an adult in the room who can, to your point, Greg, earlier, carry a conversation with an investor, carry a conversation with a prospect, carry a conversation with an engineering lead, even though they don't know engineering, right? Like, there's all these things of just being an adult in the room that matter as the company hits different inflection points, that I feel, to Sean's point, okay, great, I may not know it today, but I'm an adult enough to say, I'm going to get there, I'm going to get there, I'm going to get there. And if I can't, I'm going to throw out the white flag and ask for help, right? Or the red flag and ask for help.
I do background checks too, like I'm sure you guys do. I like network calls and try to
Sure.
find someone who they didn't provide as a reference, but back channel. I've had a couple of experiences, and some of the questions I ask those people are probably not what you'd expect. Like I always ask, is this person honest? And and I've had twice where someone said, well, what do you mean? I'm like, if I have to define my honesty,
How do you
like,
define
yeah,
honesty?
like, and like literally that's what happened. And then like I checked like 3 of 4 references on someone, and the only one who was like glowing about this person was the reference that this founder gave me, like who was his like best friend. And 3 other people basically said, I don't trust this person, they're dishonest, like that. I
Wow.
was like, I can't do this. Like when we were interested in the business, like, and we like the founder just fine. But that's like, you know, and then we had another example where that happened as well, where it was like my back channel didn't show up that well. And that's going to be hard. Like if someone's honest, like they're transparent, for example, like appropriately vulnerable, like, hey, I'm struggling with this kind of thing. And they grind like a lot, and they're like a nice person. Like most things go your way if you're like pretty nice, you work really hard, like you're intense, like you work hard and you're intense and you're honest, like a lot of things are going to go your way. And so that's one of the things I try to do to assess, but I still just feel like it's such an imperfect science. Like because ambition can like wane or expand. Like that to me, that's one thing that's very hard to assess is this person's ambition going to get bigger or smaller? I sure hope it gets bigger. Once they get more information, they're even more excited about the opportunity. But that I've had some of those experiences, and I've had some where people are like, you know what, let's sell the company now that we're 5 million in ARR. And I'm like, well, that sucks. Like, that's not what I signed up for. Like, we want to go longer. Like, we want to build bigger. That's
You
what
know,
that's, yeah.
as you were talking, one thing just came to mind, and I'm sure Josh and Sean will recognize this when I say it, but in just having those conversations, like one of the big pet peeves for me is like big grandiose statements that totally undervalue the difficulty that that journey is going to encapsulate. Like, you know, oh, we're better than all our competitors, and you know, just no detail there whatsoever. You know, oh, you know, we're gonna be at X point and no roadmap to get there.
Yeah,
You know
don't
what I
worry
mean?
about
Just
it.
kind
We'll
of
get there. Yeah, yeah,
yeah,
yeah.
exactly. Like those big grandiose statements that, quite frankly, are insulting because we know how this journey is going to go. Like it's going to be ups and downs, and you know, I'm certainly more interested in how someone responds in the down than the up. So I think just that false narrative it tends to be a big red flag.
Yeah, I think someone who sells themselves a little too much. I think the thing is if they have an answer to every question, that's a red flag. I think that's a little bit more tangible is that they need to, there's something that they don't know. And they need to tell me that they don't know it. And that's okay that they don't know it. And that's part of like Gregg's the honesty piece is like, hey, how are you going to do this? Well, this is what we think. We're not really sure, but here's what we're going to try. But like, I need help in that department. And here's where I think you guys could help. Right. That's being honest and that's being transparent and not saying, oh, don't worry about it. We're scaling at this percent. Like we're 3X from last year, blah, blah, blah. We just got to throw marketing at it, et cetera, et cetera. To me, that's a tangible red flag is the CEO that sells himself a little too much.
You know, what's interesting about that is this is like a really dumb thing to say, but you know, I say lots of dumb things. So, but sometimes when I hear a founder like really focus on the word unicorn and say like we're going to be a unicorn, what I really would have them rather say is, well, I'm not going to be able to get to 50 million in ARR if I don't do like X, Y, and Z. Like the valuation framework is going to be the valuation framework down the road, but I'd rather have them orient around not some like the fame and fortune of being someone who started a company worth more than $1 billion. I'd rather have them obsessed with, hey, what are the things I need to put in place to build? So I do think that, and Justin, I agree. Like I would rather have someone talk about their competition with a level of like respect and like I want to put the beat down on them. Like I'm ready to go head to head, but it's going to be hard. In order for me to win, I'm going to need to do A, B, and C. They're not great at this, and we can be great at this. But to be clear, like they're the incumbent, and like I think to be dismissive of, like I've heard people say things like, you know, LinkedIn's not very good at this. I'm like, I totally agree, LinkedIn's not very good at that. But you are never going to be able to get like hundreds of millions of people on your little network here. Like that's
Mhm.
just going to be very hard to do. Like the lock-in, there's only one LinkedIn really, and maybe there'll be someone else in the future, but that is really hard to see as an example. Like, so don't be dismissive of the people who have built like businesses worth like tens of billions.
Right.
Yeah, totally agree. Well, I think we're rounding out on time here, so appreciate the discussion. Obviously, the net outcome here is that picking founders is hard.
I was
And
gonna say, did we solve this
yeah,
this
yeah,
magic riddle here?
Can I,
yeah,
one last thing we didn't talk about is, Paul Graham wrote this article last year about founder mode, and I'm sure like everyone's talked about founder mode. I think people have taken the wrong thing away from that. I think founders have a unique ability to, like, I wrote this article about this, but a little bit of micromanagement is good. And like, to me, that's what founder mode is. Like, founders have to have their hand on the steering wheel. They have to want to have their hand on the steering wheel, even when they hire for their deficiencies and peel parts of their job off, which the best founders always do.
right.
They never take their hand off the steering wheel fully, and they are in the details of the business at all times and at all stages of the company. So that's what makes founders so special. And so I always want to find someone who can grow with the business, but also like never wants to take their hand off the steering wheel.
Yeah, I mean,
I
it's a
love that.
backstop against surprise.
Yeah.
Yeah, love that. Don't take your hand off the steering wheel. That's Papa Scoresby's advice for the day on the Cheat Code and Friends. We appreciate you joining the show. If this is your first time, please give us a like and subscribe. What do the kids say? Smash that subscribe button. Smash that button.
The
That's
old
what
the
my
old
kids
people
say.
say 105 is the new 30. That's all I know.
Yeah, the 105 is the new 21. Anyway, on behalf of Justin, Sean, and today's friend, Gregg Scoresby, thank you for joining the show, and we will talk with you next time.